No, tested. Yes. Share the meeting, with your friends. I'll provide an invite link right away in the chat box, so your friends can also get to join. However, we would prefer that friends gets to join from the links, but if that might look like a long process for some persons. So there you go. That's the link right there in the chat box. So get to share with your people. Let's get today, up and started. There's so much to learn today. I'm really very much excited about today. There's so much to learn. So let's get that going. I'll join us in some 2 minutes. I'll be in the background while I wait for other persons to join in also, so that we can kick it off from there. And in the meantime, if anyone here was, I think Mr. Anderson was in the class. You were with the class for yesterday. So basically, if you were part of yesterday's class, and you have any questions from yesterday masterclass, please feel free to drop them in the chat box. We'll treat them today alongside of the other plans that we have for today. So I'm just going to be here in the background while we wait for other persons to join, so we can properly kick it off. Welcome, Mr. Ibrahim. Welcome, Ms. Folashade. Let's keep the number going up. Let's get more people to join. You don't want to miss out on today's session. I tell you for free. You don't want to do that. So yeah, if you're yet to register your OKEx account, please do that. There's going to be giveaway, and you're going to need your account, for that purpose. So if you're yet to do that, go do that right away, something is coming in that regard. Okay.
I think that's some people did still ask you to but
My name is Toju Kaka. I'm the founder of In Crypto. I'm a cryptocurrency trader, blockchain consultant, and I'm one of the OKEx partners in Nigeria. I've been using OKEx since 2018. My experience of using OKEx has been fantastic. The platform is safe and secure for traders. The user interface is really clean. There were so many challenges that I was having with other exchanges that are not found in OKEx. OKEx is one of those platforms where you can trade with peace of mind. Take, for example, the trading volume. OKEx trading volume is really legit. Their listing criteria must be really good because you won't find those shit coins, that are just out there to scam you. I would recommend OKEx to other people because of the security of the exchange. OKEx is one of those exchanges that has never been hacked.
OKEx, a world-class crypto exchange founded in 2014. Recognized globally as one of the largest international crypto trading platforms in the world, serving over 20 million users in more than 100 countries, with over 400 trading pairs and $1.5 billion BTC future trading volume. With a user experience that simplifies trading for newbies and experienced traders alike, OKEx offers seamless trading options and investments with low trading fees. The new world is only a click away. Be part of the future of crypto trading. Join OKEx. Simply download the app via the Google Play Store or the Apple Store, or visit www.okex.com and get your welcome bonus as you sign up for free.
Okay, good evening, everybody. So persons are joining us from different countries. So yes, I think good day would be a very good one to use there. So today's class is going to be very different. Yeah, I can see that what's happening. We are waiting. Yeah, I can see that people are asking questions. Yeah. Today is actually going to be very interesting. One of our facilitators will be joining us shortly. Like we promised yesterday, today is going to be basically for technical analysis and futures trading. So for those of us that are joining for the purpose of that, yeah, we're here to let you know that that expectation will be met today. So just hang in there while we wait for some of our facilitators, to join in. And in the meantime, while you're still here, whatever questions you have, you can start dropping them in the chat box. So once our facilitators are back online, we'll get them treated as soon as they're here. There's a lot to learn from today, really. There's so much to learn from today. So just exercise a little patience, and then we'll get things really kicking off. So in the meantime, like I said, if you're yet to register on the OKEx app, please do that. Get your accounts ready, get your accounts verified. There are a couple of activities that we'll do, which comes as the reward of its own. So get your accounts ready, get it verified, at least do a minimum of KYC1, and then we'll be good to go and qualified for the giveaways that will be coming after. So Ms. Folashade, don't worry. Today's class will kick off soon. Just exercise some patience with our facilitators right there. Some persons are joining. We hope they join in very soon. I guess maybe some network issue or something, but we're hoping they'll join in soon. So we implore everyone to kindly just exercise some patience. Thank you. While you're waiting, don't just wait. Get someone else to join in. Get your friends, get your colleagues, let them join. We're kicking off soon. Yeah, so we just have one of our facilitators joining in now. Welcome, Mr. Kaka. Mr. Kaka will be taking us on the futures trading. So, ladies and gentlemen, welcome, Mr. Toji Kaka. Okay, so finally, we have the first facilitator for today joining us, Mr. Jomex. Thank you very much for joining us. So today, both of our facilitators are already here. We have MBJ, that's Mr. Jomex, who is going to be taking us on the technical analysis today. And also later after that, we're going to have Mr. Toju Kaka come up with and teach us about futures trading. So whatever you need to grab now, grab it. This is not a time for you to have your OKEx account registered because we're actually picking it up right now. So for those that are joined in earlier, we would like to appreciate your patience. Thank you so very, very much. Mr. Bolariwa, you said you had issues verifying your account. I don't think that issue should have been there. Maybe there's something you're not doing rightly, but that is not a problem. That should be taken care of in the course of the program. So no worries. There's nothing to no cause for alarm. So Mr. Jomex, are you ready for us today?
Can you hear me?
Yeah, I can hear you. I can hear you loud and clear.
Evening.
Good evening, sir. Thank you so very much for joining us.
Okay. I don't know. Okay. Thank you.
Yeah.
So that I can be able to share my screen.
Yeah, sure. You can go ahead now.
Okay. Good evening, everybody.
Yeah.
If you cannot hear me, just indicate in the chat so that they will find a way to fix it. I'm gonna share my screen. Come on.
If you can hear Mr. Jomex, please signify in the chat box. If you can't as well, kindly signify so we can rectify all of that also. We'd like everybody to signify if they can hear, and those who
can you see my
also.
screen?
Yeah, I can see your screen actually. I can see your screen, but I guess I think every other person should testify if they can.
Okay. Actually, technical analysis. Okay, my name is MBG. I'm the founder of Jomex. Jomex is basically a blockchain education community. So let's just get started without wasting our time. I've wasted a lot of time today. Technical analysis is not something that you can just learn in one day. So I will just try as much as possible to give you guys how do I put it? Because it's bigger than just a one-day thing. Can you hear me? Hello? Hello?
Yes, we can hear you. Go ahead, sir.
Okay. So taking analysis is bigger than just one day thing. Actually, if you want to do it on your own, you need to create trading view accounts or tab trader for mobile phones. Trading view or tab trader for mobile phones. It's just as simple as creating other accounts, other social media accounts. So let me pick OKEx, ICP OKEx. I want to use this internet computer as an example. OKEx, internet computer protocol. It seems okay. It doesn't have a USDT pair for Inter. Okay. So I want to use this ICP as an example. The first thing we're going to talk about is how to identify support and resistances. Actually, these candles you are seeing like this are basically market sentiment, trader sentiments. The algorithm is designed to be able to track trader sentiments across traders' activities and sentiments across exchanges. Then they will use it to form these whole candles you're seeing like this. The green is the bullish candle, while red is the bearish candle. Bullish as in when market is green, and bearish when market is red. Bullish as in when market is going up, and bearish when market is going down. Bullish as in uptrend, and bearish as downtrend. So if you look at the sidebar, you will see a couple of tools there. First of all, if you want to pick a coin, there is you can see my screen, right? So Paul, you can see my screen.
Yes.
Okay.
Yes.
Okay. I just want to be sure I'm not talking to myself.
Clear. Very clear.
Okay. So first of all these things you are
Tell
seeing
you
are
when
the
we're
coins.
not
All these coins you are seeing are coins I am tracking. I can remove all of them and have just one, this ICP. I have this just ICP. So to add coins to your list, you click on this plus icon here. If you click on the plus icon, it will bring out this dialog box. You type the particular coin you want to search. Let me see, OKB. This is OKEx coin. If I click on it, it will add here. It will add here. It will add to the list you have already. So I'm picking this ICP to just explain support and resistance. If you look at the candles, you will see that market is always obeying a particular pattern. It happens in forex markets. It's also happening in crypto markets. Now, if you look at now, you will see that right here, this market was trying to form a liquidity place here. It was forming supports here, here, and here. So what happens is when this support is broken and it's not reclaimed, it turns to resistance. But it's funny that sometimes when resistance is broken, it doesn't necessarily form to support. But when support is broken, most times it forms, in fact, 90% of the time that support is broken, it turns to resistance. let me draw a line. Okay, you can pick, if you look at this tool here, you will, if you click on the drop down arrow here, you will see a lot of other tools inside. You can use the trend line. You can use any of the lines there. TradingView is so complex that you cannot even use up to 3% of their tools. You just have to choose the tools that works for you and continue using it. You cannot use all their tools because it is designed for complete financial system. It's not just crypto, it's not just for cryptocurrency. And it's this thing, it's open source. People do create a particular pattern and add it to their trading view. So you can actually be seeing other people's pattern if they make it open. You can actually be seeing the tools that people are using and what they create and added to trading view. So now I'm picking this trend line to draw a pattern here. Look at something. At first, ICP was obeying these diagonal supports. As it was falling, it found a bottom here. Bottom is basically a reversal point, a downtrend reversal point. I will say that bottom is in. So as it was falling, it found a bottom here and bounced. To this level. As it reached this level, it got rejected. Got rejected from this level. Now, that place it got rejected is automatically a resistance. Let me show you how it obeyed that thing. As it got rejected from here, it's automatically turning that place to a resistance, turning these points to a resistance. Now it got rejected and fell back to that support line. See, this is basically a bear trap. People that thought it was going to sink more, if they enter market here, it will trap them. And it kept supporting that trend line. Look at it. Now, this place that was a resistance, it broke it and tried to sink back, but found support here. So if you are trying to catch this market as it got broken, you will wait for next candle to know whether it will reject the way it's rejected here and continue downtrend, or it's going to bounce and find support there. So what happened here is that it found support here as it came back to that place it got rejected before and bounced back. That was why you see this little uptrend to this place. Then it got rejected here again and came back to that trend line. If you look now, this trend line got broken and it couldn't reclaim it. So that trend line now is automatically a resistance to this trend. Look at something. It's automatically a resistance to this trend. How will you identify if it's turned to resistance? You will see that it came down to this level. This support it was forming there, that same trend line it bounced before. Now, and try to reclaim it, but the trend line is now becoming a resistance. That's why it got rejected back again here. Now, let me clear some of these things so that you will actually see what I'm doing. This for just day traders. Investors don't use this thing. So the all is to buy coin and hold to whenever they want to sell. So let me use something like this. Look at it. One, it was maintaining it. It was bouncing from that line. So that was the diagonal support. But then when it got broken here, it couldn't reclaim it. So that becomes a resistance automatically. Look at it. So what traders will be doing now, as it's trying to reverse from here, if this reverse becomes successful, you enter this trade. If you enter this trade now, you will be very careful as at when ICP gets to this point, as at when it gets to this level again, level of this 65 to 70 region. You have to be very careful, because if it got rejected there again, if it gets rejected here again, it's falling down again to this level or even lower. Now, on the other hand, if this diagonal resistance now, that this thing that was support, as it got broken and rejected once, it's now a resistance. So if it gets broken again, you will now wait for a couple of candles to know whether it will fall back. If it didn't fall back, it will continue the uptrend and probably challenge this next resistance. Challenge this next resistance. So once this place is broken, this 65 to 70, once it's broken, ICP will rally to $100 region before it falls back. It will rally to $100 region before it falls back. So that's what happens to support and resistance. When a resistance is broken, you watch the trend and know if it will find support there, because most times it's always bull trap. It's always a fake out. There's a whole lot of fake outs. I think I will use Bitcoin charts to show you guys a couple of fake outs that BTC did recently. And it also traps bears. BTC trapped a lot of bears within these 3 months of correction. So now, bulls will try to defend this place because it will get very ugly if ICP breaks this place again. It will now start forming, experiencing price discovery on the lower side. That's when if you are trading futures, if it happens, you either close in loss, or people that have the heart to wait till their account get liquidated. Because once this place is broken now, this is the last support level for ICP. This is the last support level for ICP. If this place gets broken, ICP will go down to $20 level. It will go down to $20 level. The reason you are seeing altcoin bleeding like this because of BTC dominance. Okay, I will also talk about that BTC dominance. That's why you are seeing altcoin bleeding like this, because of dominance. Let me see how OKB chart looks like. Oh boy. Oh boy. There's another thing I didn't say before it starts. There are popular time frames. Time frame is very important when you are monitoring trade. The popular ones are the 4 hours time frame and daily time frame, and 15 minutes time frame for scalpers. I'm using daily time frame because if you really want to catch a trade, you have to use a higher time frame so that you won't end up closing your trade before it reaches your targets. Now, okay, I think this OKB is very, very nice to use and analyze this. So Paul, in case you guys stop hearing me, please let me know, maybe here on WhatsApp, so that I will know.
We can actually hear you very much.
Okay. Now, let me use this OKEx coin as an example for that support and resistance. I think this bleeding happened during the time that during that China crackdown stuff, because this dump is very unusual. So I think people just closed their trade. Bot trader just closed their trade. Now, even though OKB was falling massively, this was a very strong support for it. This was a very strong support for it. This level was a very strong support. See, this level was a very strong support for it. You can see. So that was why you see OKB was falling down from here and it reached that support and bounced. We'll take advantage of support very, very well. Or else there is a kind of a massive dump in the market. If not, no matter what, coin must bounce. No matter how market is dumping, actually, coin must bounce from support before it continues the downtrend. You can see that was a very strong support. So as it was falling here, they took advantage of it. It bounced back. You can see, even when it was falling down again, it still found support around that level. So now, this is the very strong support for OKB, around $10. It's very, very strong support. Yes, around $10, very strong support. Now, it's now forming a resistance here. Look at, I will draw a line there so that you see. That's a resistance. The new resistance now is around this level. You can see it got rejected there once, got rejected the second time, it broke it, and I think it's food that caused this thing. Normally, it was supposed to bounce from here as it was falling, but because of the uncertainty in the market, that's why you see it dome. And as it fell, it tried to bounce back. You can see this, let me zoom it. You can see this green line, green candle here. It tried to break that resistance again, it couldn't. And it continued the downtrend to find support on the lower, place. Now, as this price is here, now it's actually very, very indecisive. The price now is very indecisive because it's very possible that it will retest this down support again. Something like this before it goes up again. But then we're in bull markets. Most times the lower buyers are always left behind. It's just like a whole lot of people that was waiting for BTC at 20K that time, 20K, 25K, it didn't go there. That's what happens in bull markets. The lower buyers, they don't always get it. Even this recent correction that's bounced at 40K, a whole lot of others we are at 35, 36K, and BTC didn't go there. So BTC actually decides, market actually decides its movement sometimes. Because, if you want to buy at a particular point, somebody will want to buy at a particular point, and for him not to miss his own, may probably buy before you. And if the dominance of the people buying is bigger than sellers, that's why you see uptrend. So now, like I said, this price is very indecisive at this point because there is every tendency that it will fall back to this, to clean this liquidity, these supports. It's already bouncing from there. But then the two key levels are here and this place. These are the two key levels that traders are watching. Because you can see as it's bouncing, this place that was resistance already got rejected 1, 2, 3. It got rejected again. Try to break it again back. Look at this place. Try to break it again, got rejected again. And what happens is that when a strong resistance like this is rejected, it will fall down to support. Even if market is green, as long as it got rejected heavily, it will fall back to that support. Look at something that happened here. Fall back to that support. Now, this place is very, very very, very, very important, because once this coin break this 23 region and turns it to support again, it will enter price discovery, because there is nothing here. That's what happened during price discovery. I will use Soul Chart and Axia Infinity to show you people what I mean by this price discovery. When coin enters price discovery, it's always moving very, very crazy, because it has no resistance. It has zero resistance at that level again. It will just be moving. People will be buying because they are not afraid of any rejection. But you also have to be very careful when you are chasing a coin in price discovery, because once whales leave you, you become a bag holder, unless the project comes back, the coin comes back to that place. This is 61K. So let's continue. So now, if you are trading OK Bitcoin now, at this level, risk takers will just buy at this level. Then you put your stop loss below this line, because this is what happens in panic sellers. If this coin try to fall down from here, somebody will sell here. Okay, let me use this place as an example. During this red candle, the person that bought here probably panicked and sold here, and this coin bounced back to the level it bought. So it's better for you to identify a strong support, a strong bounce level, then put this thing, the stop loss below it. If you're actually very active in the market, you don't have to use any stop loss, because sometimes even after that support level is broken, it comes to retest it, just like this ICP I used. Let me go back there. Just like this ICP. Just like this ICP. When this support was broken, it came back to retest it before it continued the downtrend. So market doesn't just fall continuously like that, and it doesn't just pump continuously like that. Some traders will identify what they call head and shoulder here, head and shoulder pattern here. Sometimes head and shoulder pattern is always a bearish candle, a bearish pattern. Something like this. Sometimes it's always a bearish candle, a bearish pattern. You see this thing? The inverse of this is a very bullish candle. So if I turn this candle, if I turn this chart upside down, you will see that it will look very bullish. That's why I was telling you guys that this thing is very indecisive at this point. Let me find, I think there is a head and shoulder, something like this. See? But then this particular pattern is not always this pattern will only be valid when this support line is broken. That's one thing about head and shoulder pattern. For this head and shoulder now to be valid, it must break this support line. And why it doesn't just happen is that if this support line is broken, ICP, this coin will fall to as low as, in fact, to as low as $3. It's actually a very massive head and shoulder. But if it is inverse is like the other side of it. If you turn this in upside down, inverse is always very bullish. But this head and shoulder, you have to be very careful trading it. Now, for it to get invalidated, it will break the both shoulders. It will have to break the both shoulders. If you listen very well, you will hear when I was talking about it breaking this place that it keeps rejecting. This 23 to 25. To invalidate this structure, it will either break it and turn it to support, or continue to range here, continue accumulation. If this accumulation is continuing, this is exactly the pattern you'll be seeing on this coin. It will keep testing that place, coming down, fake out, come down. If the sale is heavy, it will fake out on the downside too. That's what it will keep doing until it turns this place to support, then enterprise discovery. I will use EOS has this thing very well, this long accumulation very well. So that's it for support and resistance. Now, let me use one BTC chart. Let me see if I have this. Okay. Look at something. If you are in any of my group, you will see when I dropped these charts in the group when we were at 40. This 40, that was when I told my group members that BTC is going to bounce, because this particular thing it was doing here was exactly what was going on here. It was exactly what was going on here. I have this circle, this big circle you are seeing. I drew this circle when BTC was bouncing from here. Now look at where we are already. We are above 61. So sometimes you try to find a homogeneous pattern. Look at what was happening here. BTC was on complete downtrend, but when this downtrend was broken, it came back to retest it. This thing was just a mere retest. This was just a mere retest. Then this uptrend would have continued, but there was a news that came that caused this particular big dump. BTC doesn't just dump like this. It doesn't just dump like this. But because of the Chinese and the SEC, all this news coming from US and China, that's why you see this whole thing happening. If not, a clear pattern was just a breakout of this downtrend, a retest that happened here, then the uptrend would have continued like that, just like what it is doing here now. The uptrend would have just continued, but they delayed it here because of FUD, F-U-D, if you understand what that means. So now, I think I have the one that is 1 week charts. Okay. Look at something here. Look at something here. That's exactly what's happening. Look at it. That was a diagonal resistance from this POB, from this point of breakdown. Can you guys hear me? Hello?
Yeah, you're very, very, very loud.
Okay, that was a diagonal resistance from this point of breakdown from here. That was a diagonal resistance. Now you can see 1, 2. When this thing was broken, it retested the first, retested the second. So that's support now that was holding this previous uptrend turned to resistance. BTC came and tested it here. It didn't even test well. Then Chinese food came. This was where it's supposed to fall from or retest a bit before breaking it. But the Chinese food didn't even allow it to get to that line again. It fell and found support down here. If you look now, you will see this was actually a very strong support. Look at 1, 2. Let me circle it. This is 1. In fact, even here, because that was a breakout point. See that place, see another one. So as long as we are in bull markets, BTC will always bounce from that support, from supports. That's why I was so confident when we get to this point that BTC will have to bounce here, or else this bull market is over. It will be a different thing. Or else this bull market is over. So now look at when you get to that resistance. Look at what happened here. It doesn't just go straight line from that resistance. It doesn't happen. It does not. That's why you see some correction. The first time it hit it, I corrected, it hit it again. Let me zoom this thing. You will actually see a couple of candles that got rejected. This was the first one, the second one, the third one. But because of the strong FA, even this fake out that happened the other day, it faked it. But the good thing is that when BTC is doing this kind of thing, when it's forming those strong candles at a very close range, those strong candles at a very close range, when it gets broken, it turns to a very strong support. Now, it's faked out first, faked out the second one, faked out the third one, the fourth one, it broke it and came back to find support around here. Now, bulls are now very confident that this place is now support. That's why you're seeing all this reaction. That's why you're seeing this reaction, this strong reaction you're seeing. And it's not just the fact that it's bouncing from support. There are a lot of strong FAs backing BTC right now because the exchange traded, what is it called, ETF that is coming from US is actually a very strong fundamental analysis for BTC. So this whole price action you're seeing is, number one, it is obeying a historical cycle movement, cycle trend. That's number one. Secondly, there is a strong FA. This cycle trend wouldn't have been possible if we are still experiencing strong food like the one that Chinese was doing. So now, this is actually a phenomenal breakout for BTC because if you see, this is the level that I am very concerned about now. This is the level I'm very concerned about, the previous all-time high. So if we are able to turn this place into support, then BTC will go. That's why you see this thing I drew here, because this place now still has some little resistance, but this is not obvious at all. So if it's able to go up and turn this place into support, then BTC will attack this all-time high diagonal resistance, and that will be around $85,000 to $90,000 per one. That would be around $85,000 to $90,000 per one. Now, another thing you have to know is that, just like I was talking about FA, sometimes technical analysis can actually be completely invalidated by FA. If you trade with only just technical analysis, then you end up burning your account, because I may draw this whole thing, finish, then China will, maybe US will announce that they are banning cryptocurrency or something. You will just see BTC do a V curve, a U curve here with this same candle that it has down to wherever it's falling to. And it will completely invalidate whatever technical analysis you think you have. This TA works very, very well on a normal market condition and in a bull market. And if you are in a bear, okay, what I mean by normal market condition is, if we are obviously in a bear market, then your TA will work on your resistance and support. If we are in bull market, work on your resistance and support. But if market is uncertain, you have to be very careful. After doing your TA, you have to also pay attention to trends, to news, and every other thing that can be able to impact the market either positively or negatively. Because the way they did this whole crypto stuff is, you can actually be benefiting on both sides of the game, whether market is dumping or going up, depending on benefiting from both sides depending on what you're trading. Bears benefits, bulls benefits, and the same people who are bulls are the bears too. So sometimes they actually, at what we call market manipulation, sometimes those people that are actually moving these markets, at some point they will take profit on purpose and markets will fall. So sometimes they take profit on purpose. So as for BTC, let's just hope that it continues this run like this. Let me show. I think I made an analysis for weekly candle. Let me use weekly candle. Let me use weekly. I wish I can share this. This weekly candle, I did it a week ago. I think a few weeks ago when I drew something like this. I think the people in my group must have seen where I dropped something like this. And I was saying that this may end up being the biggest bull flag in history. And that's actually what's going to happen now. Who is drawing on the screen? Oh. Please stop drawing on the screen. Who is drawing this thing now? This red stuff, who is drawing it? Stop it, please. So now on a weekly candle, on a weekly time frame, BTC is breaking out completely. This is a phenomenal breakout. So a candle close above this level will make BTC ultra bullish. A candle close above this blue line now will make this BTC very, very bullish. So what we are all hoping now is that this uptrend, this green candle continues and holds till Sunday, because a new candle will be formed on Sunday, and holds till Sunday, closing above this place and turning this place into support. Then it will open a new door for a complete fresh run, a fresh price discovery for BTC. And you guys know what happened during the time it broke the previous all-time high resistance. Let me just show you what is going to happen to, what is definitely or probably going to happen to BTC now when that thing gets broken. Now look at something here. This was the 2017 top. When it got broken, it's actually fought it a couple of times. Look at, it was fighting to break it, but when it got broken, BTC went up. BTC went up 233% from that place. So imagine 233%. I think I've checked it before. Yeah, 233, 235. Imagine 233% from here. Let me just show you what will happen if that should repeat itself. Then we'll be looking at, that's 200K. We'll be looking at seeing BTC at 200K. If it should repeat what happened during the previous breakout of the all-time high. So when BTC enters price discovery, it always moves very fast and very far. Look at when this one was broken too. I think there is an, okay, It's going to take a while to refresh from the beginning. But when 13K was broken, it's ran to 20K. And then when that 20K was broken, BTC trended to 64,000. So imagine breaking this 64,000 previous all-time high. It will actually move very, very fast. And the market is becoming more mature now because the government are in already. If they should approve the ETFs in the US, then the market will be more liquid. It will be stronger and less volatile like the stock markets. You understand? It will be because the big money companies and institutions will start using BTC as a reserve asset. Once they start using it as a reserve asset, the liquidity will be stronger. It will be more liquid because what makes it more liquid is when okay, let's start rounding up. Hey, this cannot be one day stuff. In fact, it's bigger than this. It will just be okay. Because I was start rounding up. So when large money buys in and hold for a long time, those are the liquid coins that will now create more liquidity in the market and make BTC less volatile and stronger in trend. Whenever it's moving, you will know it's moving. It will not just dump the way it's used to because the large holders are not selling. So that's what's going to happen. That's why everybody is happy about the coming ETF. It's not just because it's going to pump the market, it's because it's to make the markets more mature and it make the market more mature and people have this confidence that if they put their money there, okay, people will now have this confidence that if I put my money here, it's not going to crash. Government is not going to ban it and make it crash. That's actually why institutions are not really buying it. The ones that knew that there's no how government won't come in are already in profit, like MicroStrategy. Michael Saylor will end up being one of the richest person on earth very soon because of this BTC that he's been buying and people were laughing at him. That guy is going to make a whole lot of money. And of course, the richest man in the whole world bought BTC at a lower price. That's to show you that they really know what was coming. I've even left the CA to FA, but actually FA plays a very big role in technical analysis. No matter what you draw on this board, if FA did not comply to it, it's invalid, it's rubbish. So that's about that. I don't know, I wanted to show you people what, let me just quickly do it before I round up. I think the time is not on. AX, this Axia Infinity, me and my group community members, we two chop this coin. This is what happens during price discovery. Okay, this is 1 week. Let me use 1 day. This is what happens during price discovery. This was the previous trend. I will use only this one. There won't be time for me to use SO too, because SO did the same thing. This was the previous trend. You see the beauty of support and resistance. See, look at this place. This was the previous accumulation zone until this Duva box was broken. It broke out from here. Even after it went up, it have to come and retest it as support before this price discovery. This price discovery, it's always going in zigzag way like this because it has no resistance up. It will just be going up and finding and forming support on the lower side, going up, finding support on the lower side, going up, forming support on the lower side as the market keep maturing. So this is what one thing about price discovery. This guy went up 15x. That's 1,500%. Okay, 1,000% from its previous all-time high. 1,000, approximately 1,200%. almost 1,200, almost 12x from its previous all-time high. So imagine if BTC should do something like that. BTC 10x from here is 300. Wait. BTC 10x from here is how much? Let's say 60K. 10x from here will be 600K. Imagine that. Like it doesn't look like it's going to happen, but you would love to see it because it's very, very possible. It has done it already. 2020, 220, this 220, 221. It has done it already. BTC went from the crash at March 14, I mean March 13 was to 3,500. 3,500 to 64K. That's almost how many X? Almost 20, that 18X. So imagine BTC 10X from this point it is now, it will cost 600,000 per month. So I think I'm going to end here. Sapor said he's going to organize the class again so that we'll have more time because TA is bigger than just a 30 minutes, 1 hour stuff. So if you have any question around what I have just said, you can ask.
Wow, just wonderful, wonderful stuff from Mr. Jomex. Thank you very much. This is the chance now for those that might have a question, from what has been taught so far. This is an opportunity to drop your question right there in the chat box. We'll try as much as possible to take them before the end of the masterclass. Thank you so very much, Mr. Jomex. We really, really appreciate this class. I enjoyed this class, to be very honest. I enjoyed the class. So I'll be taking down the questions that maybe after the class, we can just take them all together. But we'll give some 5-10 minutes for some questions before Mr. Kaka, comes on screen. So if you have any questions, please drop them in the chat box. Let's take care of it right away. Okay, you can unmute your speaker. If you have a question, you can. Okay, okay. There's a question here from Ibrahim Shitu. He's asking, what is trend line?
Trend line.
Priska, yeah.
Okay.
He said, what is trend line? Then Priska was asking, what time frame were you analyzing on?
Okay, I said, okay, it seems she didn't join us on time.
I think she got disconnected.
Okay. I was using, if you can still see my screen, I was in daily time frame. Look at where you select the time frame. If you click on it, you will see all of them. I said the popular ones are the 4 hours time frame, the daily time frame for day traders, and 15 minutes for scalpers, like for people who they are always on screen. So they use that 15 minutes candle to enter and exit. But the more favorable ones are the 4 hours, the daily time frame, 3 days and 1 week. You can actually from there see a clear picture of what's going on.
That's good. So could you quickly take Ibrahim's question? Okay. He said, what are the trend lines?
Okay, I'm coming. Let me reply something. Okay, trend line are like a pattern or channel that's just like a trend. How do I explain this trend? A pattern or a channel that the price is following. Now let me use this. Which coin? Okay, I think BTC 4 hours. BTC 4 hours. Yes, that I dropped for them yesterday. Okay. Let's go to BTC 4 hour. You can still see the screen bar. Hello, you can still see the screen bar.
Yeah.
Okay.
I can still see
Okay.
the screen.
Now look at something. I will draw that channel from this particular breakout. Let's see. This is a trend line. On the downside, it also has a trend line. So these two trend lines are the ones that created this channel that BTC is following. Now, if you look at the upper part of the trend line is always a resistance, while the lower part are always support. Look at something that was happening inside these two parallel lines. BTC fell from here. You can see the candle will keep rejecting from that trend line. For it to actually form very well, it has to tap it like 1, 2, 3 times or 4 times. Now, this was the first one, second one, third one, and the fourth one was here before a fifth attempt, it broke out. Now, on the downside, this is one. This one, because of demand, it didn't come down. This is the second time it's testing the lower trend line. Now, had it been this thing got rejected again, buyers will now be waiting for this line, waiting for orders here. When this thing got rejected here, a lot of orders were placed here. That's why it bounced. So these are the trend lines. These are the trend lines it's obeying. Now that this trend line is broken, traders will now wait to see if this place will now form a new support, just like it happened here before. Let me draw the line of that one. Just like it happened here before. Look at something. Just like it happened here. When it broke, it came back to retest that trend line. Look at this red candle here. It came back to retest it. After retesting, it continued. So that's exactly what people will be looking at here to know whether it will bounce from this place again. If it's bouncing from here, then we'll look at going to a new all-time high, something like this. Just like it happened here. It went out, came back to retest it, and we are up before this 4 hours accumulation, before going up again. Now, if this thing is a fake out, if it falls back to this line again, it is most definitely going to come down to this lower trend line and probably find support there or get broken. Now, the danger of this type of pattern
Okay. Mr. Jomex, I think we lost him there. We just gave a couple of minutes, maybe some network. I think he should be back up shortly. Oh, okay, we already lost him. I think it's network.
No, so, I'm here. What happened? I'm with you guys. What happened?
Okay. I just noticed you left and then you just came back actually.
Yeah. But I don't know if I was able to answer his question though.
I think you did. Okay, so very quickly, I think, okay, we'll take the other questions later so we don't keep Mr. Kaka waiting for too long. But Mr. Jomex is still with us, so most definitely he will get to answer all the questions towards the end of the class. Thank you so very much, Mr. Jomex.
Welcome.
Yeah, so moving on to the big part, the other part of the program is we've learned the technical analysis. You know, I believe with this knowledge now, some of us can be able to, you know, stare at that chart, you know, dead in the face and finish up the analysis and then, you know, go get the bag. But, you know, let's go to the other section now where we have Mr. Kaka come on screen. and teach us more about futures trading. Mr. Kaka is one of those traders that I like very personally. I like him. So I'm sure we all are going to enjoy class with Mr. Kaka. Mr. Kaka, are you there, sir?
Yes, I'm here. Thank you very much,
Akotoji.
Mr. Nathaniel. My daddy.
Welcome,
I
sir.
greet you especially.
Welcome, sir.
Welcome,
Yeah,
Mr. Kaka.
thank you.
Okay, so the screen is all yours now. So take us with you.
Okay. I'm going to share my screen. My name is Toju Kaka. I'm the founder of Crypto. I'm a cryptocurrency trader and I teach people how to trade. I'm excited to be here today. Today I'll be talking about cryptocurrency futures. That's what I'll be teaching today. And yeah, if you've been around, you must have heard a lot of things about futures trading. Some people say futures trading can take you to the past. Some people say futures trading is like trading away your future. There's a lot of fear, amongst some unexperienced traders when it comes to futures trading, and they're afraid, and they are right to be afraid, because unlike spot trading, futures trading is very different. In futures trading, the risk is real. That's what I keep telling people. The risk is real. All right. So during the course of this interaction, I call it an interaction because I want it to be as interactive as possible. I want to get your questions flowing in. You can just be throwing your questions on the chat box as I'm talking, so that I will know the areas to focus on. All right. We're going to talk about the meaning of futures. We're going to talk about coin margin futures versus USDT futures. We're going to talk about futures versus perpetual swaps, futures versus derivatives, all those, terminologies, so that you really understand what you're doing. And then we're going to talk about who is qualified to trade futures, because not everyone is qualified to trade futures. What kind of capital do you need? Common terms, risk associated with futures trading, and then how to succeed in futures trading and how to trade on OKEx. Very, very important, because OKEx is one of the best places to trade your futures. All right. OKEx is one of the best places to trade futures. All right. So futures trading is if a futures contract, gives the buyer the obligation to purchase a specific asset and the seller to sell and deliver that asset at a future date. All right. And there are different types of futures trading. We have the perpetual swap. All right. And then we have the monthly, quarterly, and semi-annual futures. All right. Yeah. So, and one thing I love about OKEx has it all. Okay. If you want to trade perpetual swaps, if you want to trade monthly futures, if you want to trade quarterly futures, if you want to trade semi-annual, you can do all that. All right. But because of the fact that this class is tending towards the beginner side, we are going to focus on the perpetual swaps. All right, we're going to focus on the perpetual swap and forget about the monthly, quarterly, and semi-annual for now. All right, now coin margin versus USDT margin futures. Before we talk about that, we need to understand what margin is. All right, margin is your collateral. All right, margin is your collateral, and basically, before you go into any trade, one of the beautiful things about futures trading that makes it very different from spot trading is that you can trade with leverage, all right? And that gives you more profit or exposes you to more loss. Yeah. So in trading with leverage, for example, you can put a $10,000, you can put a $1,000 margin into an account and trade with $10,000. Trade as if you are using $10,000. In that case, you are using 10x. You are using 10x of your capital. All right. Now, your margin is what you put into an account or into a trade that gives you permission to trade. It's like your collateral, right? Before you can trade with leverage, you need to have something, all right? And that's your margin, all right? Now, in coin margin futures, you are trading, you are using your coins as margin, all right? For example, if you are trading Bitcoin coin margin futures, you are using Bitcoin as your underlying collateral. You are using Bitcoin as your margin. If you are trading USDT futures, what are you using as your margin? USDT, right? If you are trading EOS coin margin futures, it means you are using EOS as margin, all right? Now, for cryptocurrency, for people who are just getting into the futures trading, newbies, USDT futures is recommended because it's easier to calculate. It's easier. Your losses and your profits are realized in USDT. USDT is stable. So if, for example, you make $1,000 profit, if you make $1,000 profit, you know it's $1,000, all right? That your profit is not subject to volatility, and your margin itself is not also subject to volatility, all right? So if you're just starting out on trading futures, I would advise stick with perpetual swaps and then stick with USDT margined perpetual swaps, all right? Okay, now, but coin margin futures also has its own benefits, all right? For instance, I do trade coin margin futures. I own EOS. I like to trade EOS, and I also trade USDT futures. I use USDT futures for day trading, swing trading. While my position trading, if for example I'm holding a lot of EOS tokens, I may want to take, I may want to expose myself to more risk, or I may want to edge my position, my spot position, by taking a short position just in case the market is going down, and I can do that on coin margin. All right. Okay, futures versus perpetual swaps. Remember earlier on we said that there are different types of futures contracts: monthly, quarterly, and semi-annual. Now, if you look at this, they're all based on the time frame. A futures contract is supposed to expire, right? Monthly contracts expire monthly, quarterly contracts expire quarterly, and so forth. All right, but perpetual swaps are futures contracts that do not expire. All right. Now, if you do a little digging, do a little study of how this futures contract started, it started with farmers that wanted to hedge their risk. For example, if a farmer is selling yam, he may tell the buyers to come and buy the yam even before the yam is harvested. So when the buyer does that, the buyer does that at a fixed price. So let's say the buyer buys some yam. Let's just use a random figure. Let's say 10 2 bars of yam at 10 naira. All right. At the time the farmer is planting it. So by the time the farmer harvests the yam, the price of yam could be what 20 naira. But he has to sell it to the buyer who already paid, or who already agreed to pay 10 naira for it. All right. So it allows. Now, what that does to the farmer is that it removes the risk from the farmer, because the price of yam could fall at the time of harvest to like $5, but then the risk is already on the trader, on the speculator. So in that case, if the price of yam does fall to $5, to 5 naira, sorry, I'm using naira now, not dollar, because I believe most of the participants here are Nigerian, so you can relate. So if the price of yam falls down to like 5 naira at the time of the harvest, the farmer has already locked in some profit, because now he will be selling higher than the market price. All right, so that's the way futures contract actually started. So there is usually an expiry date, all right, but in perpetual swap there's no expiry date. All right, the contracts are being renewed. They're being renewed. All right, so now in perpetual swap there's no expiration. You can hold a position for a very long time. They are perpetual, right? Well, I love these things. You know, you can actually get them just by looking at their name. Now, because of the fact that they are perpetual, in order to keep the contracts going, the traders, speculators pay what's known as a funding fee. So if the market is going up, like the market is right now, Bitcoin is going up. If Bitcoin is going up, the people who are taking a long position are going to pay the people who are taking a short position. The people who are taking a long position are obviously making money when the market is going up, right? But if the market is going down, the people who are taking a long position are losing money, all right? So they are going to get paid for holding that position, right? So the way the fees work in perpetual swap is that if you're holding a position, you are either going to pay a fee or you get paid, all right? And if the market is moving in your trend, in the direction, if you are trading in the direction of the trend, if the market is moving in your favor, you're going to pay a funding fee to the other people who are the opposite end of the trade. All right. Does that make sense? All right. So this is one way to actually know the direction of the macro trend. All right. If the funding fee is positive, all right, it means that market is in an uptrend. It means that if you are holding a long position, you are going to be paying a fee. All right. Yeah, you can check the fees that you pay when you're holding a position on OKEx. Believe you me, OKEx fees are very, very, very good compared to other platforms. OKEx fees are low. All right, that's one of the reasons why you want to trade on OKEx. All right. Okay. Now, for the sake of the initiative, allow me to say that before I proceed, let me talk about the differences between okay, let me talk about the differences between spot trading and futures trading for those people who don't understand. All right. Now, yeah, futures trading are definitely contracts. All right. So you're not holding the physical assets. You're just holding a contract that is tied to the physical assets. That's one difference. All right. In spot trading, you pay trading fee, but in futures trading, in perpetual swap, you pay funding fee. All right. And like I said, like I explained, there's a possibility that you're going to get paid if you are holding a position that is against the trend of the market. All right. Futures versus derivatives. Derivatives includes futures, perpetual swaps, and options. All right. Yeah, but generally speaking, when people say futures, when most people talk about futures, especially newbies, they are usually referring to perpetual swaps. Perpetual swaps is the most correct term, especially for USDT perpetual swaps. Okay, now common terms associated with futures: cross margin, isolated margin, leverage funding fee, long, shorts. When someone says he's taking a long position, it means the person is buying. And when someone says he's taking a short position, it means the person is selling. All right. So if you go to the OKEx platform, you're going to see, okay, now this is the OKEx exchange, and this is the spot page on the OKEx exchange. All right. So you can see now I have buy and I have sell. All right. But if you go to the USDT perpetual swap, you see I have open long, I have open short. All right. So buy means long and sell means short. All right. Okay. Now, moving on. Okay. Now, in cross margin, now remember I said earlier that margin refers to the amount that you put in a trade in order for you to be able to trade. All right. I explained that one of the differences between futures and spot trading is that in futures, you can actually borrow money to trade. So I can trade with as if I have $10,000. Meanwhile, I only have $1,000 in my account. That means if I make a 10% profit, I make a 10% profit on $10,000, not $1,000. That is one of the reasons why you want to trade futures, right? Because it enables you to make exponential profits, right? But then be careful, because on the downside, it exposes you to more risk, right? We're going to talk about the risk associated with futures trading as we go on, right? Now, in cross margin, if, for instance, you have $10,000 in your account and you put $500 in margin. All right. Now, if the trade goes against you, your entire futures account is exposed to risk. All right. But if you put that $500 in isolated margin, and the trade is going against you, it is only that $500 that is exposed to risk. Traders should understand this. All right. One of the major differences between cross margin and isolated margin is the risk exposure. If you are using cross margin, you want to make sure that you use stop loss, because your entire account, your entire futures account is exposed to risks. But if you're using isolated margin, only the amount that you put inside the margin, that's why it's called isolated. So that margin is isolated from your entire account, right? So which one is better? I don't know, right? If you are the type that want to hold on to a long-term position trade on futures, you can do that with cross margin. So if the trade goes against you, you can wait it down and then continue. But if you, strictly speaking, you want to use stop loss when you're trading futures, right? So no need to hold on to a losing position. So if isolated margin is some sort of stop loss on its own, right? Because if you put in $500 into isolated margin, you're sure that the worst case scenario for that trade is that you lose $500. All right. Now, stop loss and take profit are very, very important things that you need to know and you need to master if you're trading futures, right? Because the trade can go in your favor massively and then fall back and be in it and also result to a massive loss. So you need to set stop loss and take profit whenever you enter a futures trade. Let me show you guys something. Now, if you look at this OKEx platform, now this is the sports page, right? You see, if you look at the URL, it says OKEx.com trade sports EOS USDT. Now, if you look down here, it shows you percentage fee, right? It shows you the fee that you're going to take when you enter a trade. Now, let us go to the futures. Now, this is spot. Let's go to the futures. If you go to the futures, you see what it does here? It gives you a calculator. Now, what does that tell you? Before you enter any futures trade, you need to calculate, right? Unlike spot trading, futures trading requires a lot of calculation, a lot of position sizing, a lot of risk management. Because in spot trading, if you lose money and you have the patience to wait, you can actually recover your account, right? Let's say you bought Bitcoin at around 2018, and then the price of Bitcoin falls down 80%. You can actually recover your money, all right? Because by now, if you held on to that position, you'll be in a lot of profit by now because Bitcoin is now $60,000, right? But if you're trading futures, it will be very difficult for you to absorb that pain. 99% of traders, whenever there's a massive crash, a lot of traders get liquidated. A lot of traders get liquidated because they fail to use stop loss. They fail to calculate their risk. If you do not understand risk management, you don't have to trade futures, because that's one of the reasons why people make silly comments like trading futures is like trading away your future, or futures can take you to the past. The people who make such comments only do that because they do not understand risk management. If you understand risk management, you agree that trading futures is one of the best ways to actually enter into a position. Because why should I enter a position with? Why should I buy one Bitcoin with $60,000 if I can buy one Bitcoin with $600? All right. If you enter a position on spot with and you want to buy one Bitcoin, you can do that with $60,000 today, right? But I can enter the same position on futures and take that trade with just $600. And then if both of us win, we make the same sort of profit, all right? Although, do you get that? It's like you are taking a huge position with a small amount, all right? And if the trade goes in our favor, I can just lock the trade by putting in my stop profit, all right? While you get to hold on to the trade, all right, with $60,000, and me, I'm holding on to the trade with just $600, all right? So if both of us have the same amount of capital, my $600 is holding the same amount of position that yours $60,000 is taking. I can use the remainder of my capital to go and do something else. Now that's one of the reasons why some people trade futures, because you can take on a large position size with a smaller amount. Remember, there's a risk. Now, although I'm trading with just $600, it is possible that the reality is that I am exposed to as much risk as the person taking the trade with $60,000. Even more risk, because if market goes down against me, what happens if I don't have enough margin to hold the trade? I get liquidated. But the other guy who is trading with $60,000, he can absorb 99% loss. And if he can have the patience to wait, he's going to recover his money. But for the person trading futures, the likelihood is that I'm not going to be able to wait. And so I'm going to lose. I'm going to get liquidated. So how do I avoid getting liquidated? By using stop loss. That is why it is important before you trade futures, you have to understand position sizing. You have to understand risk management. I've already done a video on risk management. I can share it with you guys that you go home and study it. It's a broad subject that I don't think I can cover within these few minutes that we have to share. All right, let me check the chat. Okay, so guys, I need questions, guys. Give me some questions in the chat. Let me know how I'm doing. If you have some specific questions regarding what I said, all right, I want to make sure that this thing is as interactive as possible. But in order for it to be very organized, I want you to be training your questions on the chat, all right? Or just hide me on the chat. Let me know that you're hearing me. Let me know that I'm making sense, all right? Now, let us go back to our slides, all right? So we know what cross margin is. We know what isolated margin is. We know why it's important to put your stop loss and take profit. Leverage. I've mentioned this before. If you're trading with futures, you can trade with up to 125x leverage, right? Funding fee, I've explained that. CME gap. Futures traders should know this, all right? Because especially when you're doing your technical analysis, my brother already did a very terrific job, explaining technical analysis. But so I'm not going to go into the CME gap, all right? So you already know what it means to long and what it means to short. Now, who is qualified to trade futures? Futures trading is not for beginners, all right? Futures trading is not investing, all right? Investing is holding on to a position for at least 1 year. It's strict financial term, that's investing. But in futures trading, usually it's for day traders, swing traders, people who want to make a quick cash from the market, people who want to make money from the market, no matter the market condition. Now, this is another benefit of trading futures. If you're trading sports, there's a likelihood that on a boring market day, the market is just trading within a range. It'd be difficult to make money, all right? But if you're a futures trader, if you know your onions, know what you're doing, you can make money in any market condition. If market is going up, you're making money. If market is going down, you can make money. And if market is going nowhere, market is just ranging in a trade, if market is just ranging, you can just lock down on that range and make your money, all right? So you should have sound knowledge of spot trading before you go into futures trading. You must have a backup business or job, because one thing that makes a lot of traders fail is they have this "I need to make money" syndrome. On a day that, and this has to do with your trading psychology as well. There are some times that you're not supposed to trade, all right? You're not supposed to trade every day, every time. There are sometimes that you're just out of the zone. You're just not in the zone, all right? So on those days, you don't trade, you sit back, relax. All right. There are some days that your head is just clear, your mind is clear, and you are seeing the chart and you just know what's going to happen. Those are the days you should trade. All right. So you must have something to distract you. You must have another form or another sort of business, right, that is bringing in money. That's when you're going to succeed as a trader. But if you're doing it full time, it's going to be really difficult for you because you have those psychological challenges to deal with. All right. And then you must be the kind of person that has the financial and mental capacity to absorb losses. All right. Because like I explained, in futures trading, the losses are real, and the losses can really get out of hand. The losses can be really big, all right? So you must have a risk management plan, and the risk management plan is whenever you get into a trade, you should have an exit strategy for your losing trade, all right? Some of us only want to cash out when we need profit. Do that on sports, you'll succeed. But if you do that on futures, before you go into a futures trading, you must have a plan of, okay, if the trade goes in my favor, I'm going to take profit at this point. And if the trade goes against me, I'm also going to exit at this point with some loss. Now, it doesn't make sense to you, right, to be planning to make loss, but that's the reality if you want to succeed in this game for the long term, because if you do not plan your losses, the market will plan your losses for you. And when the market plans your losses for you, it's going to take away your entire account. So if you have a $10,000 account, for instance, you can say, okay, I can only lose $500 per trade. Now, when you have that plan, if you enter a trade and it goes against you and you lose, you're not going to have hypertension. You're not going to come to Twitter and start saying futures trading is a scam, because that's part of your plan. You already know that the worst case scenario is that I'm going to lose $500 in this trade. And the moment you make that loss, you have your mental capacity. Your mental capacity is intact. Your financial capacity is intact. You have enough capacity to enter the next trade and look for the next opportunity. But if you're the type that you want to hold on to a losing position, if you can do that on spot, you can do it successfully. But on futures, when you're seeing minus 3,000%, right, it messes you up. All right. So you should also understand technical analysis, fundamental analysis, risk management, and trading psychology. All right. The kind of capital you should put on futures, I need to tell you this. It should depend on your income, your risk appetite, and your trading background. If, for example, I'm making 1 million naira per month, all right, I'm going to move some money for expenses, some money for feeding, some money for school fees. All those kind of funds, you shouldn't use them to trade, right? You want to make sure that you're stable financially, all right? So you see someone trading with a $10,000 account and you feel bad because all you have is just $5,000 or $1,000. Doesn't make sense, right? If you can maintain trade with proper risk management on your $5,000 account, you can grow it up to $50,000. I have some friends that did that started with $5,000 and now they have a lot of capital to trade with. All right. But if you're the type that you say, okay, because you see someone trading with $10,000 and the person can take a very huge risk, you want to go and trade with as if you have $10,000, it's going to affect you. All right. And also your trading background. If you are just new to the world of trading, you want to trade with little capital and then increase it as you gain more experience, right? But if you're already a veteran in the world of trading, if you're already into Forex trading and all that, then you can just kick off with large capital and make some money. All right. Why is futures trading riskier than spot? I already explained that, because you actually lose money. In spot trading, you can actually wait, but in futures trading, the losses can be really, really big. Now, why do people trade futures? I already said this: to speculate on the market direction, to hedge price risk. Assuming I'm holding one Bitcoin, and I'm very sure that Bitcoin is, I feel with my technical analysis that Bitcoin is going to go down. All right, but I don't want to sell my Bitcoin, right? Because I'm a Bitcoin maximalist. I really believe in this thing, and I want to hold on to it for a long time, right? But I know that in the short term, Bitcoin is going to go down. What I can do is that I can short Bitcoin, all right? I can short Bitcoin, so I'm making some money as Bitcoin is going down. So the position that I'm holding on spot, all right? So the position that I'm holding on spot is still there, but I don't feel the pain of the loss because I'm making money as the price is going down. In spot, you can't make money as the price is going down, all right? But in futures trading, you can make money as the price is going down. It's going down by taking a short position, all right? Now, okay, I already said this. Futures trading is extremely capital efficient because less money is required to open positions than if you're in spot, all right? Okay, now let's talk about the last part before we go on to, if I give you a brief overview of the OKEx platform. Now, how do you calculate your risk and place your stop loss? You need to know this before you go into futures, all right? Now, you calculate your acceptable risk based on your capital and risk appetite. You risk only 1% of your account per trade. So if your account size is $10,000, then your risk should be like $500 or $100, depending on your risk appetite. If you can risk $500 per trade, it's okay. But if you're the type that you don't really like to risk a lot of amounts, then just trading is not for you in the first place. But you can try $100. Now you need to identify your stop loss position based on your FA and TA. All right. MBJ already gave us a little bit of that technical analysis. So you can enter a position and then you put your take profit and stop loss. You need to identify your stop loss position, and then you use your calculator to determine your position size, and then adjust your position size until it is within acceptable risk level. All right, now let's go and do some practical. Remember, I said if you look at the spots, if you look at this page, let's see if I can move this down. Excuse me, I don't know. This thing is just okay. Let me just use like that. So okay, now observe the difference. One difference between spots and the futures. In the spots, they don't give you any calculator because it's not really that important. But on the futures trading, you have the calculator, meaning that you have to calculate before you enter a trade. All right. So this is what the futures trading on OKEx would look like. You have your pair. You have your pair. So how did I get here? If you just go to OKEx.com and then you go to OKEx.com, you go to trade, just go to trade directly, all right? It's going to take you here, all right? And then when you come to this trading pair, now this is spots, right? You can see OKEx.com. If you look at the URL, see OKEx.com, spots, EOS, USDT, right? If you click on this, right, you will see different options: spot, perpetuals, futures, margin options. All right. Now I told you if you're starting out, you want to start with the perpetual swap. All right. So you click on perpetual swap, right? And you click on BTC USDT. Now, a lot of newbies make this mistake. So I want you to pay special attention to this. All right. Now, if you change this BTC USD to BTC USD, let's see what happens. You still get something to trade with, but they are very different. All right. BTC, when you see this URL swap, BTC USD, it's referring to coin margin swap. Now, I already explained the difference between coin margin swap and USDT swap. All right. So when you see BTC USD, you know it's coin margin swap. But when you see USDT, all right, you know it's what? You know it's USDT margined swap. All right. So if you search for BTC USD BTC, you see you have BTC USD, you have BTC USDT. All right. So the USDT is the USDT swap, and the BTC USD is the coin margin swap. Now you have to understand this difference. It also applies to other pairs. For example, EOS. You can see in the perpetual swap, you have the EOS USD, which is referring to the coin margin swap, and the EOS USDT, which is referring to the USDT swap. And which one are we interested in? We are interested in the USDT swap, right? So let's go there, right? So this is the EOS USDT swap, all right? So this is the price. The mark price, 24-hour low, 24-hour high, volume. There's a lot of information here. Time to funding, 6 hours. You can see the funding rate is positive now. So that means the longs are paying the shorts. You can see the margin isolated. You can choose to trade with isolated margin. All right. All right. So let's see if we can take if we can take a few trades. So assuming, okay, oh, sorry about that. The calculator was opened. Let me just refresh this. So you can see the other book, trade history, you can see the chart. You can do your charting here, or you can go to trading view and do your charting, but come back to OKEx to do your trade execution, right? You can see the other book, all right? So in order for you to trade, take your trade, now remember I told you have to calculate. You have to calculate, all right? So let's say I want to trade with a leverage of, let's say I want to trade with a leverage of, I want to trade with 20x leverage. And let me just make this comment on leverage. Some people think that if you're trading with low leverage, you're taking less risk. That is not usually the case, right? Because leverage is just one parameter, and risk is defined as, could be defined as risk multiplied by position size multiplied by the stop loss position, right? So that's like, you have three parameters to look into. So if you're trading with high leverage and you want to trade with low risk, you can just reduce the position size, right? But if you're trading with low leverage and your position size is very big, you're still taking a lot of risk. All right, so let's say we want to trade with 20x leverage, and let's say we want to trade the EOS perpetual swap, and let's say we want to buy at market price. So market price now is around 4.62. Now what we want to do is calculate our PNL. All right, so the two important things to calculate for your trade is your PNL and your liquidation price, right? So you enter your open price. Let's say you want to take profit when price gets to 6, all right? And let's say you want to trade 1,000 USDT, all right? That's what you want to put in margin. So you calculate, all right? Okay. So what does it tell me? It tells me that I'm going to make a profit of 289 USDT. If I enter this trade now and it gets to 6, and price gets to $6, I'm going to make a profit of 289 USDT. Now, this PNL means profit. All right. Now, if we go back a little and go and trade EOS USD perpetual swap, right? If you go to the calculator, you will notice that your profit will be calculated in EOS, not USDT. Okay, let's see if we can do this. All right, let's do this. How much time do we have left? Oh, we're running out of time, so I'm just going to hasten things up. I don't know how much time I have. I'm just going to use only this one example. I guess in the next class we're going to in-depth trading. We're going to talk about different things, all right? But let's just be quick. Mr. Nat. So let's say I want to enter at 4.6 and I want to close at 6. And my open amount. Now, this is one difference between the coin margin and the USDT swap. Now, in the USDT swap, my open amount is in what? Is in USDT. But in the coin margin swap, my open amount is in what? Is in EOS. So I have to calculate the amount of EOS that I will use in entering this trade because I'm using EOS as margin. Do you now see the difference? All right. So let's say I enter with 600 EOS. Let me calculate. All right. So my PNL is in EOS. So I make a 140 EOS. All right. So 140 EOS at $6. 140 multiplied by 6. This is good at math here. All right. So let's go back. So I just wanted to show you that in the coin margin swap, your P&L, the profit or loss is realized in coins. While in USDT swap, your profit or loss is realized in USDT. So let's come back to our calculator here. All right. Now, this open amount, personally, is not as important as this margin. All right. It's not as important as this margin. So, because okay. So let's say you have a $10,000 account, and with your risk management, you don't want to risk more than $500 per trade. If you are going to take this trade now and you put your take profit at $6, you want to know where you're going to put your stop loss. If you don't know, if you haven't figured out where you're going to put your stop loss, then you shouldn't enter a trade because it's too risky. You can lose a lot of money. So let's say you figured out where you're going to put your stop loss and you want to put your stop loss at 4. Let's calculate. So if the price gets to $4, it means I'm going to lose 130 USDT, right? So that's within an acceptable risk level, all right? And if my acceptable risk per trade is $500, it means that I can actually take on more position. Let's see if I trade with a $10,000 open amount. Okay, now that's too large. Let's see if I trade with a $5,000 open amount. Okay, so I'll keep adjusting it until I get something that is within my acceptable risk level. So that means I can trade with the $4,000 open amount, because if the trade hits my stop loss, I'm going to lose how much? Just $500, which is that's within my acceptable risk level. And my margin is what? 198. Now, if I'm trading with 4,000 USDT open amount, I'm going to, and my close price is 6, I'm going to be making $1,000 USDT over $1,186 $1,186 USDT profit. So 1,186 profits and roughly $500 loss. If you do the ratio, it's around 1:2. So it's acceptable. Generally, there's something called profit and loss ratio. All right. If you're going to take on a position, you want to make sure that that your profit loss ratio makes sense. All right. Now I'm trying to make $1,000 and I'm willing to raise $500. All right. So there's something called win rate as well. And there's something called strategy as well. Before you enter into any futures trade, that's why there are a lot of things. Futures trading is not for beginners. You should have a strategy. You should have a strategy, a proven strategy that has been backtested. Now, one of the simplest strategies is called the pullback trading strategy. Now, this is the secret. Every time Bitcoin does 10% dip or 30% dip, if you buy Bitcoin every time Bitcoin does a 10% dip or 30% dip, that's the strategy. It's called a simple pullback strategy, right? You're just buying the pullbacks. In a bull market, you're going to make a lot of money, all right? And sometimes you realize that the only thing you have to figure out is, are we in a bull market or are we in a bear market? If you can figure out the macro trend, just trade in the direction of the trend. If we're in a bull market, buy pullbacks. All right, it's a very simple strategy for people who have time to wait, who want to say swing or position trades. So if you can just buy 10% pullback or 30% pullback, you will discover that over a given period of time, 80% of the time you'll be correct. 80% of the time you make money. And those 20% of the time that you don't make money, that the dip keeps getting deeper, because we know there are times like that where Bitcoin just dips and then you buy the dip and the dip keeps getting deeper and it keeps turns to deeper life. If you have discipline enough to use your stop loss to get out of such losing position on time, you discover that overall you'll be in profit because 80% of the time, whenever Bitcoin does a 30% pullback, it usually comes back up in profit in a bull market. So that's the strategy, right? So 80% of the time you are making money, but 50%, but 20% of the time you are going to make loss. In futures trading or perpetual swap trading, you have to accept the fact that sometimes you are going to lose money and you have to prepare for those times. If not, you are in for stories that touch, you are in for tears, premium tears, all right? Because sometimes market just goes down or up against you and keeps trending in that direction. So if you can cut your loss, it means that with if you combine this winning strategy that you have that has a 80% win rate, plus your risk management that ensures that you only lose a certain amount of trade whenever the trade, a certain amount of money, whenever the trade does not go in your favor, you discover that in the long run, you will be making money. If you look at the account of a winning trader, what you're going to see is small loss, small loss, small loss, big win, small loss, big win, big win, big win, big win. Now those big wins, they make up for the small losses. But if you look at the account of a losing trader, you see small win, big loss, big loss. All right, now why is that? Why is it that? It's because they don't use stop loss, right? So you need to use this calculator, calculate your position size, and then combine it with an effective strategy. Your strategy may not be a pullback trading strategy. It could be the opposite. You can decide to trade the opposite. The opposite of a pullback trading strategy is a breakout trading strategy. You discover that whenever Bitcoin or whatever coin forms a particular pattern, and then it breaks out of a particular range or a particular channel, what happens is that it keeps going in that direction. So you can trade breakouts. All right, like MBJ was trying to show us some patterns, all right, of some breakouts. All right, if you are trading breakouts, you also make money. But the important thing is that where do you put your stop loss? All right, because if you are trading breakouts, a lot of the times the market will do as if you want to break out and then to come back down to look as if you bought the top. If you are trading breakouts, there's also a win rate. So you combine your win rates with your win-loss ratio, with your risk management, and that is the only way you can survive in futures trading. All right. The next thing is your trade execution. Once you already know the amount of USDT you are going to trade from the calculation and you have your balance in, you just enter it. All right. And then you put in your take profit and your stop loss, and then you're good to go. And then you click on open long or open short. All right. So that's it, guys. That's it. Wow. I hope with these few points of mine, I've been able to confuse you that futures trading is not so bad. That futures trading is not trading away your future and it can't take you to the past. Well, you just have to be careful, guys. Risk management is all it takes to survive in this game. Thank you very much, Mr. Nathaniel.
Thank you so very much, Mr. Kaka. You know, I always like it when Mr. Kaka is on screen. Thank you so very much. You know, I'm sure people in the audience, you know, I've also had one or two things to learn from this particular session. You know, for some persons that have been waiting for that push, you know, that conviction to go and trade futures, well, here comes the conviction, you know. I believe with some of the basics now that Mr. Kaka has been able to highlight and, you know, touch on, you can know how to properly, you know, guide yourself correctly as you do this trading. So thank you so very much. At this point, I would like, if you have any questions, please, Ibrahim Shitu says he loves it. Yeah, try it. But, you know, the way they say with alcohol is free, but you should drink responsibly. So
yes, exactly.
If you're going to try this also, you might want to, you know, pitch that principle into that. So there was a question that came in earlier, but since Joe Max is not here, I think I'll just try and see how I can take that. Somebody asked, why is Bitcoin currently the only one moving? Well, that is the king of all coins, right? And before the rulers, you know, chief priests and every other person begin to do what they want to do, the king must finish his own show. So basically, while we have, you know, Bitcoin is the king of all coin. And before we get to see any movement in the market, we need to, Bitcoin is actually the coin we all get to look forward to see its price and its movement, you know, on the chart. Then from there, we can now say, okay, this is the direction the market is going. Is going to be a possible bull run, or we're just going to be here stuck in the bear market for a while. So I believe that should answer the question for the person that has hacked. So we're gonna have a giveaway session. So a link is going to be in the chat box. 1 minute. I'm having some issues with my screen here. Okay, sorry, I had a little issue with my, I don't know if it was network, but I lost the communication for a while. Okay, so here's the thing. I'm going to be dropping the link now. Are we ready for this? Can you show me some readiness in the chat box? Raise some hands, give me some, thank you, Mr. Collins. I think I'll just give Mr. Collins this giveaway. Then every other person will praise the Lord. Okay, Mr. Innocent has followed suit, so I'll just wait for a couple of more persons. Then I'll drop the link. Let's get to do some of these things right away. If I get 3 more responses, I'm going to drop it. Okay, thank you, Mr. Prince. I'm still waiting. More responses, guy. Please motivate me. Okay. Thank you, Mr. Kenneth. Okay. I think I'm motivated already. So here comes the link, guys. Fill it up. Do your best with it, and let's get it going. So find the link in the chat box and do your best with it. Okay, so I believe everyone is right there on it, doing justice to the link. But in the meantime, if you have any questions, please drop them also in the chat box. Mr. Kaka is still very much with us. You can address them very short in a short while, and then also we can see how to go about it. If you have not downloaded your OKEx app, I'm sorry, that is not on me. That is on you. But I do hope you download your OKEx app, because you never can tell. There might just be another opportunity for you tomorrow to win something also. So the giveaway will be credited to individual participants' account after the end of the masterclass. And also, don't forget to join our Telegram page. The link is already in the chat box as well. So let's get all of that going. Well, as you can see on my screen, Some persons are not joking. They are not joking at all. We're already having some winners right here. So let's keep it coming. Share it with your friends. Share it with as many as you want to benefit from it. The giveaway would be credited in 10 days time. So everyone who has participated correctly will most definitely be rewarded. So while we're at it, I would like to say a very big thank you to Mr. Kaka. Thank you so very much. Like I said, I always enjoy your class or the meetings that you're on. So I would also like to say a very big thank you for taking out your time to be here with us. I think there's okay, is somebody trying to ask a question? I don't think so. I don't think so. Okay, so also a big thank you to our facilitator who took us on technical analysis. You know, I believe everyone that participated in that class has had one or two things to learn. We will consequently have other master classes, you know, him that's teaching and us on various aspects of crypto. We'll bring Mr. Kaka here again, you know, to continue from where he has stopped today. Just stay tuned to our social media platforms. Follow OKEx Africa, follow us on Telegram, follow us on Twitter, so you can be updated on our recent happenings. But this masterclass will most definitely continue, and it will be with lots of benefits, both knowledge-wise and you know, giveaway-wise also. So thank you very much, everyone, for joining us today. Tomorrow is another time. I'm sure you don't want to miss it. Get your friends to be here. Get your even bring your enemies. Let them come and prosper. You never can tell. That might just settle the beef between you and your enemy. So that's just that's that about that. Thank you, everyone, for joining us today, and do have a wonderful night, and for those in the day, do have a wonderful day.